MN Real Estate Law Practice Test. Question 1. A $313,500 sale carries a 5.5% commission. What is the total commission before any split? Option A, $17,242. Option B, $47,025. Option C, $2,665. Option D, $4,467. The correct answer is option A, $17,242. Total commission is found by multiplying the sale price by the commission rate. Down payment, discount points, and property tax calculations use different bases. The phrase before any split means the full brokerage commission is calculated first. Question 2. A buried heating oil tank is discovered during inspection of a small retail building. Why is this important for Sawyer and Blaine involving a small retail building priced at $339,500? Option A. They automatically convert the property to personal property. Option B. Underground storage tanks can create environmental and cleanup concerns that may affect value and use. Option C. They prove the deed is forged. Option D. They eliminate all mortgage requirements. The correct answer is option B. Underground storage tanks can create environmental and cleanup concerns that may affect value and use. Underground storage tanks may involve leaks, regulatory requirements, and cleanup costs, making them material environmental concerns. They do not convert real estate into personal property, prove deed fraud, or remove financing requirements. Environmental issues can affect value, marketability, and buyer decisions. Question 3. A buyer agrees with the lender to become personally liable on the seller's existing mortgage. What is the buyer doing for Harper & Egan involving a townhome priced at $440,500? Option A, taking subject to the mortgage only. Option B, creating an easement appurtenant. Option C, assuming the mortgage. Option D, paying deed tax only. The correct answer is option C, assuming the mortgage. Mortgage assumption involves the buyer taking personal responsibility for the existing loan obligation with lender involvement. Taking subject to a mortgage lacks personal liability to the lender. Easements and deed taxes do not describe assuming debt. Question 4. An easement benefits a neighboring parcel by allowing driveway access across Finley Peterson's land. What type of easement is most likely? Option A, personal license only. Option B, trade fixture. Option C, a mechanic's lien. Option D, easement appurtenant. The correct answer is option D, easement appurtenant. An easement appurtenant benefits another parcel and usually runs with the land. A personal license is revocable permission, a trade fixture is tenant property, and a mechanic's lien secures payment for improvements. The presence of a benefited parcel points to an appurtenant easement. Question 5. A deed gives Sawyer possession for life, then ownership passes to Morgan Davis. What interest does Morgan Davis hold before Sawyer's death? Option A, remainder interest. Option B, leasehold estate. Option C, easement in gross. Option D, mortgage lien. The correct answer is option A, remainder interest. A remainder interest is a future interest that becomes possessory after a life estate ends. A leasehold is a tenant's possession, an easement in gross is a use right, and a mortgage lien secures debt. The buyer's right follows the life tenant's measuring life. Question 6. A lender draws a line around a Winona neighborhood and refuses otherwise qualified mortgage applicants there. What fair housing and lending term best fits for Casey and Edina involving a single-family home priced at $258,500? Option A, plottage. Option B, redlining. Option C, accretion. Option D, estoppel. The correct answer is option B, redlining. Redlining is denying or limiting credit in an area for discriminatory reasons rather than evaluating individual qualifications. Plottage relates to value from assemblage, accretion is natural land buildup, and estoppel prevents inconsistent claims. Area-based discriminatory lending violates fair lending principles. Question 7. During a first substantive contact with a residential consumer in Woodbury, What disclosure should the licensee provide for Finley in Woodbury involving a single-family home priced at $460,000? Option A. A final closing disclosure showing loan terms. Option B. A county tax statement for the current year. Option C. An agency disclosure form explaining available agency and facilitator relationships. Option D. A deed prepared for recording. The correct answer is option C. An agency disclosure form explaining available agency and facilitator relationships. Minnesota requires an agency disclosure form at the first substantive contact in residential transactions covered by the statute. The form explains representation choices and facilitator status before the consumer decides whether to enter a representation contract. Closing disclosures, tax statements, and deeds serve different functions later in the transaction. Question 8. A buyer takes title while the seller's existing loan remains in place, but the buyer does not become personally liable to the lender. What phrase best describes this for Taylor and Winona involving a small retail building priced at $448,500? Option A. Assuming the mortgage with release. Option B. Creating a life estate. Option C. Recording a quitclaim covenant. Option D. Taking subject to the mortgage. The correct answer is option D. Taking subject to the mortgage. Taking subject to a mortgage means the property remains security for the debt, but the buyer does not personally promise the lender to pay. Assumption involves personal liability unless otherwise released. Life estates and quitclaim covenants are unrelated to this financing arrangement. Question 9. At closing, a seller debit for unpaid property taxes usually means what for Emerson in Minneapolis involving a lake cabin priced at $339,500? Option A. The seller is being charged for the portion owed for the seller's period of ownership. Option B. The buyer is paying the seller's commission twice. Option C. The lender has forgiven the loan. Option D. The deed has failed to convey title. The correct answer is option A. The seller is being charged for the portion owed for the seller's period of ownership. A seller debit reduces the seller's proceeds for an amount the seller owes, such as the seller's share of property taxes. It does not double a commission, forgive a loan, or prove the deed failed. Debits and credits allocate amounts between the parties. Question 10. A buyer's lender evaluates income, credit, and property value without discrimination. Which law commonly governs equal access to credit for Kendall and Moorhead involving a fourplex priced at $405,500? Option A. Statute of Frauds. Option B. Equal Credit Opportunity Act. Option C. Truth in Zoning Act. Option D. Rule against perpetuities only. The correct answer is option B. Equal Credit Opportunity Act. The Equal Credit Opportunity Act prohibits discrimination in credit transactions based on protected characteristics. The statute of frauds concerns enforceability of certain contracts, and zoning or perpetuity concepts are unrelated to lending equality. Financing decisions must focus on lawful underwriting factors. Question 11. A buyer representation agreement in Bloomington is best described as what type of document? Option A. A deed transferring title to the buyer. Option B. A loan commitment from the lender. Option C. A written contract that creates agency representation for the buyer. Option D. A property tax statement from the county. The correct answer is option C. A written contract that creates agency representation for the buyer. A buyer representation agreement is the written contract that creates buyer agency. It does not transfer title, approve financing, or state county taxes. Representation contracts define the broker-client relationship and compensation terms. Question 12. A buyer transfers contract rights to another buyer but remains liable unless released. What is this called for Riley in Stillwater involving a condominium unit priced at $217,500? Option A. Novation with automatic release. Option B. This cheat. Option C. Ad valorem taxation. Option D. Assignment. The correct answer is option D. Assignment. Assignment transfers contractual rights to another party, but the assignor can remain liable unless a release or novation occurs. Escheat and ad valorem taxation are unrelated. The distinction between assignment and novation is commonly tested. Question 13. Which deed gives Finley Thompson the broadest set of title warranties from the grantor? Option A, general warranty deed. Option B, quitclaim deed. Option C, bargain and sale deed with no covenants. Option D, tax certificate only. The correct answer is option A, general warranty deed. A general warranty deed provides the strongest customary covenants of title from the grantor. A quitclaim deed conveys whatever interest the grantor has without warranties. A bargain and sale deed without covenants and a tax certificate provide less assurance than a general warranty deed. Question 14. A facilitator working with Hayden in Northfield performs services without representing either side. Which fiduciary duty generally remains unless expanded by written agreement? Option A, loyalty to the seller only. Option B, confidentiality. Option C, obedience to the buyer's investment goals. Option D, advocacy for the party paying the commission. The correct answer is option B, confidentiality. A facilitator does not act in a fiduciary capacity as a buyer's broker, seller's broker, or dual agent, but confidentiality remains a duty unless the relationship is expanded by written agreement. Loyalty, obedience, and advocacy belong to agency representation, not ordinary facilitator status. Commission payment does not create fiduciary representation by itself. Question 15. A listing agreement for a Egan seller is missing a definite end date. Why is that a licensing problem for Harper & Egan involving a small retail building priced at $361,000? Option A, listing agreements are valid only if they renew forever. Option B, expiration dates are allowed only in commercial leases. Option C, Minnesota listing agreements must include a definite expiration date. Option D, the county recorder assigns the expiration date after closing. The correct answer is option C. Minnesota listing agreements must include a definite expiration date. Minnesota listing agreements must be written and include a definite expiration date. Automatic indefinite listings create consumer protection concerns and do not meet the required content rules. County recorders do not supply listing agreement expiration dates. Question 16. An appraiser subtracts curable physical deterioration and functional obsolescence from replacement cost. Which approach is being used for Cameron in Rochester involving a small retail building priced at $382,000? Option A, sales comparison approach only. Option B, income approach only. Option C, gross rent multiplier only. Option D, cost approach. The correct answer is option D, cost approach. The cost approach estimates land value plus improvement cost minus depreciation. Sales comparison relies on comparable sales, and income analysis capitalizes income. Depreciation from replacement cost is the clue. Question 17. Wetlands are suspected on a vacant Olmsted County parcel. What should a licensee recommend before development assumptions are made? Option A, obtain qualified advice about wetland restrictions and permitting. Option B, assume all wetlands can be filled without approval. Option C, use only the buyer's preferred building sketch. Option D, ignore wetlands because they affect only personal property. The correct answer is option A. Obtain qualified advice about wetland restrictions and permitting. Wetland restrictions can limit development and require permits or expert review. Assuming fill is allowed or relying only on a sketch creates risk. Wetlands are real property and land use issues, not merely personal property concerns. Question 18. A Minnesota landlord withholds a deposit for faded paint caused by normal use. Why is that deduction questionable for Jordan in Bemidji involving a vacant lot priced at $349,000? Option A, deposits may be withheld only for broker commissions. Option B, normal wear and tear is not a proper basis for withholding a security deposit. Option C, all paint changes are automatically tenant damage. Option D, the tenant must buy the property to get the deposit back. The correct answer is option B. Normal wear and tear is not a proper basis for withholding a security deposit. Security deposit deductions are for items such as unpaid rent or damage beyond ordinary wear and tear. Normal fading from ordinary use is not the same as tenant-caused damage. Broker commissions and purchase rights are unrelated to residential deposit accounting. Question 19. A rumor says a Bloomington home was once the site of a natural death and possible paranormal activity. Under Minnesota disclosure rules, how is that fact treated for Drew in Bloomington involving a vacant lot priced at $220,000? Option A. It must always be disclosed in the listing contract. Option B. It makes the property unmarketable until court approval. Option C. It is not treated as a material fact that must be disclosed merely for that reason. Option D. It requires the buyer to receive a separate environmental report. The correct answer is option C. It is not treated as a material fact that must be disclosed merely for that reason. Minnesota law states that certain stigmatizing facts, such as suicide, natural death, or perceived paranormal activity, are not material facts requiring disclosure merely because they occurred. That does not change the duty to disclose physical defects or other material facts. Listing contracts, court approval, and environmental reports address different issues. Question 20. Which Minnesota tax is generally associated with recording a deed that conveys real property for Hayden in St. Paul involving a duplex priced at $226,000? Option A. Mortgage registry tax only. Option B. Utility franchise fee. Option C. Federal gift tax return fee. Option D. State deed tax. The correct answer is option D. State deed tax. Deed tax is generally associated with recording a deed conveying real property. Mortgage registry tax relates to mortgage debt, while utility franchise and federal gift tax issues are outside the ordinary deed recording charge. The transaction document determines which tax applies. Question 21. A lender offers Blair Thompson a mortgage whose interest rate can change based on an index after an initial period. What type of loan is this? Option A. Adjustable rate mortgage. Option B. Package mortgage only. Option C. Open-end listing. Option D. A graduated lease. The correct answer is option A. Adjustable rate mortgage. An adjustable rate mortgage has an interest rate that may change according to an index and loan terms. A package mortgage includes personal property, an open-end listing is not a standard listing type, and a graduated lease changes rent over time. The index-based interest change identifies the loan type. Question 22. What is the main purpose of an owner's title insurance policy for Emerson Peterson? Option A. To insure the roof against storm damage. Option B. To protect against covered title defects that existed before the policy date. Option C. To guarantee future market appreciation. Option D. To replace the need for a purchase agreement. The correct answer is option B. To protect against covered title defects that existed before the policy date. Owner's title insurance protects against covered past title defects, liens, or ownership issues discovered after closing. It is not property casualty insurance, an appreciation guarantee, or a substitute for the purchase contract. Title insurance focuses on ownership risk, not physical damage or investment performance. Question 23. A property manager collects rent for an owner in Bemidji. How should those funds generally be treated before proper disbursement for Jordan in Bemidji involving a vacant lot priced at $334,500? Option A. As the manager's personal operating funds. Option B. As sales tax collected for the state. Option C. As trust funds handled according to the broker's trust account obligations. Option D. As title insurance premiums. The correct answer is option C. As trust funds handled according to the broker's trust account obligations. Rent collected for an owner is money held for another and must be handled under trust accounting duties. It is not the manager's personal money, a sales tax fund, or a title insurance premium. Property management requires careful separation of client funds. Question 24. A social media ad for a mixed-use property in Edina uses a team name. What must the advertisement clearly and conspicuously display? Option A. Only the salesperson's nickname. Option B. Only the property street address. Option C. Only the team logo without the brokerage. Option D. The real estate brokerage name. The correct answer is option D. The real estate brokerage name. Minnesota advertising rules require the brokerage name to be clearly and conspicuously displayed. A team name may be used only with broker authorization, and the brokerage name still must appear. Nicknames, street addresses, and logos do not replace the required brokerage identification. Question 25. If Rowan Davis tells the licensee that the seller will not perform under the signed purchase agreement, what must the licensee do? Option A. Immediately disclose the stated intent not to perform to the other party or parties. Option B. Keep the information confidential until the closing date. Option C. Cancel the agreement without telling the buyer. Option D. Disclose only if the seller misses a loan contingency. The correct answer is option A. Immediately disclose the stated intent not to perform to the other party or parties. A licensee put on notice that a party will not perform according to the transaction agreement must disclose that intent to the other party or parties. Keeping the information secret would mislead the other side. The rule is different from a party's inability to satisfy a contingency. Question 26. A factory closure outside the neighborhood reduces demand for nearby homes. What type of depreciation does this suggest for Quinn and Red Wing involving a mixed-use property priced at $217,500? Option A. Physical deterioration only. Option B. External obsolescence. Option C. Functional obsolescence only. Option D. Accession. The correct answer is option B. External obsolescence. External obsolescence is value loss caused by factors outside the property, such as economic changes or adverse surroundings. Physical deterioration is wear and tear, while functional obsolescence is internal design deficiency. A factory closure is external to the property. Question 27. Why should a purchase agreement for a fourplex in St. Paul be in writing and signed by the party to be charged? Option A. All oral contracts are criminal offenses. Option B. Only lenders may sign real estate contracts. Option C. The statute of frauds requires most real estate sale contracts to be in writing to be enforceable. Option D. A deed is unnecessary if the parties shake hands. The correct answer is option C. The statute of frauds requires most real estate sale contracts to be in writing to be enforceable. The statute of frauds generally requires contracts for the sale of real property to be in writing and signed by the party to be charged. Oral agreements may fail enforceability even if the parties intended a deal. Lender-only signatures and handshake transfers do not replace the required written contract and later conveyance documents. Question 28. A. Egan listing agreement omits the real property description. What required element is missing for Harper & Egan involving a townhome priced at $375,000? Option A. The buyer's credit score. Option B. The lender's underwriting model. Option C. The appraiser's license number. Option D. A description of the real property involved. The correct answer is option D. A description of the real property involved. Minnesota listing agreements must describe the real property involved. A buyer's credit score, underwriting model, or appraiser license number is not a required listing agreement element. The contract must identify the property being offered. Question 29. A contract substitutes a new party and releases the original party from liability. Which term best describes that change for Jordan and Bemidji involving a vacant lot priced at $376,000? Option A. Novation. Option B. Assignment only. Option C. Accretion. Option D. Hypothecation. The correct answer is option A. Novation. Novation substitutes a new obligation or party and releases the original party when all required parties agree. Assignment transfers rights but does not necessarily release the assignor. Accretion and hypothecation involve land buildup and pledging property as security. Question 30. Which Minnesota tax is generally associated with recording a mortgage that secures debt on real property for Jordan and Bemidji involving a farm parcel priced at $319,500? Option A. Personal income withholding tax. Option B, mortgage registry tax. Option C, sales tax on furniture. Option D, special assessment appeal fee. The correct answer is option B, mortgage registry tax. Mortgage registry tax is tied to the recording of a mortgage securing debt. Personal income withholding, furniture sales tax, and assessment appeals are different issues. The exam often distinguishes mortgage registry tax from deed tax. Question 31. Under Chapter 82 Standards, what must a broker do to properly supervise salespersons at a Winona office for Taylor & Winona involving a newly built townhouse priced at $403,000? Option A. Let each salesperson approve their own contracts without broker review. Option B. Delegate all trust records to buyers and sellers. Option C. Monitor brokerage activities, review transaction documents, and review trust account books and records. Option D. Supervise only advertising and ignore purchase agreements. The correct answer is option C. Monitor brokerage activities, review transaction documents, and review trust account books and records. Broker supervision includes ongoing monitoring of salespersons, transaction documents, and trust account records. Salespersons do not self-supervise, and clients are not responsible for brokerage trust accounting. Limiting supervision to advertising would miss major broker responsibilities. Question 32. In a gross lease for a Minneapolis office, which cost structure is most typical? Option A. The tenant pays all property taxes, insurance, and maintenance separately. Option B. The tenant receives title at the end of the lease. Option C. The rent is based only on retail sales volume. Option D. The landlord pays most property operating expenses from the rent received. The correct answer is option D. The landlord pays most property operating expenses from the rent received. In a gross lease, the landlord typically pays most operating expenses and receives rent as a gross amount. Net leases shift more expenses to the tenant, and percentage leases tie rent partly to sales. A lease does not transfer title merely because it is gross. Question 33. If one broker represents both Blair Kahn and Casey Thompson in a residential transaction, what must occur before the broker acts as a dual agent? Option A. All parties must give informed consent to the dual agency relationship. Option B. Only the seller must consent because the seller listed the property. Option C. The broker may proceed without consent if the commission is reduced. Option D. Consent is unnecessary if two different salespersons are involved. The correct answer is option A. All parties must give informed consent to the dual agency relationship. Dual agency requires informed consent from the parties because the broker owes duties to both sides and cannot advocate exclusively for either one. A lower commission does not remove the conflict, and two salespersons licensed to the same broker can still create dual agency. Seller-only consent is not enough. Question 34. A seller says the basement is perfectly dry despite knowing of repeated water intrusion. Why is that more than ordinary puffing for Cameron in Rochester involving a small retail building priced at $463,500? Option A. It is always protected opinion regardless of knowledge. Option B. It is a factual misrepresentation about a material property condition. Option C. It is allowed if the buyer gets a loan. Option D. It becomes legal if stated verbally instead of in writing. The correct answer is option B. It is a factual misrepresentation about a material property condition. A specific false statement about a known material condition can be misrepresentation. Puffing is general opinion, not a false factual claim about water problems. Financing approval or verbal delivery does not make a known material misstatement acceptable. Question 35. A licensee directs families with children only toward one area of Blaine. What fair housing problem does that conduct create for Sawyer in Blaine involving a townhome priced at $202,500? Option A. Amortization. Option B. Subordination. Option C. Steering. Option D. Novation. The correct answer is option C. Steering. Steering occurs when a real estate professional guides prospects toward or away from areas based on a protected characteristic. amortization is loan repayment, subordination is lien priority adjustment, and novation is contract substitution. The conduct described limits housing choice and raises fair housing risk. Question 36. A landlord in Eden Prairie deducts from a security deposit for unpaid rent and damage beyond ordinary wear and tear. What makes those deductions more defensible for Reese in Eden Prairie involving a vacant lot priced at $406,000? Option A. They are based only on the landlord's dislike of the tenant. Option B. They include normal fading of paint from ordinary use. Option C. They are taken without notice because deposits are always non-refundable. Option D. They are tied to permitted reasons and supported by a written explanation. The correct answer is option D. They are tied to permitted reasons and supported by a written explanation. Minnesota security deposit deductions are generally tied to unpaid obligations or damage beyond ordinary wear and tear, with a written explanation when money is withheld. Personal dislike, normal wear, and treating every deposit as non-refundable are not defensible bases. Documentation is essential in landlord-tenant accounting. Question 37. A garage built on Cameron Okafor's land extends 2 feet over the boundary onto a neighbor's parcel. What issue is created? Option A. Encroachment. Option B. Hypothecation. Option C is subrogation. Option D. Reconciliation. The correct answer is option A. Encroachment. An encroachment occurs when an improvement physically intrudes onto another parcel. Hypothecation pledges property for debt, subrogation substitutes one party's claim, and reconciliation is an appraisal conclusion step. The garage crossing the boundary is the key fact. Question 38. During negotiations in Winona, Kendall Davis changes the price and closing date in the seller's offer. What is the legal effect of that response? Option A. It is an acceptance because some terms stayed the same. Option B. It is a counteroffer that rejects the original offer and proposes new terms. Option C. It creates a lease instead of a purchase contract. Option D. It keeps the original offer open forever. The correct answer is option B. It is a counteroffer that rejects the original offer and proposes new terms. Changing material terms creates a counteroffer rather than an acceptance. The original offer is rejected unless the offeror renews or accepts the new terms. Keeping some terms unchanged does not preserve the original offer forever or convert the transaction into a lease. Question 39. A Blaine salesperson wants to place personal money in the broker trust account to save for taxes. Why is that improper for Sawyer and Blaine involving a townhome priced at $426,500? Option A. Personal funds must always be kept in the listing broker's trust account. Option B. Salespersons may use trust accounts as savings accounts with broker consent. Option C. Trust accounts may contain only trust funds except limited identified funds for service charges or minimum balance requirements. Option D. Commingling is allowed when the amount is less than 1 month's rent. The correct answer is option C. Trust accounts may contain only trust funds except limited identified funds for service charges or minimum balance requirements. Trust accounts are for trust funds, with only limited identified personal funds allowed for service charges or minimum balance requirements. Using the account as a personal savings account would commingle funds. Broker consent or a small amount does not change the commingling rule. Question 40. For Jordan Okafor's first real estate job in Edina, who submits the Minnesota salesperson license application after the applicant becomes associated with a broker? Option A. The applicant directly through a personal account only. Option B. The listing client from the applicant's first transaction. Option C. The county recorder in the county where the applicant lives. Option D. The licensed real estate broker with whom the applicant is associated. The correct answer is option D. The licensed real estate broker with whom the applicant is associated. A Minnesota salesperson must be associated with a licensed broker, and the broker submits the license application. The applicant alone does not file the salesperson application, clients have no filing role, and county recorders do not issue salesperson licenses. Broker sponsorship is central to salesperson licensure. Question 41. A buyer deposits earnest money with a broker in the form of a negotiable note rather than cash. What extra care is needed for Skylar in St. Cloud involving a rental house priced at $191,000? Option A. The non-depositable item must be handled through authorized escrow with written authority and proper records. Option B. The broker may throw it away because it is not cash. Option C. It can be placed in the broker's personal safe without records. Option D. It automatically becomes commission income. The correct answer is option A. The non-depositable item must be handled through authorized escrow with written authority and proper records. Non-depositable items received as earnest money require careful escrow handling, written authority when the broker holds them, and proper records. They are not discarded, hidden as personal property, or treated as commission income. The rule protects all parties' interests in non-cash deposits. Question 42. Which event usually allows trust funds in a Minnesota real estate transaction to be disbursed for Cameron in Rochester involving a small retail building priced at $322,500? Option A. A verbal request from one salesperson. Option B. Closing of the transaction, written agreement of the parties, statutory affidavit, or court order. Option C. A social media announcement that the deal is done. Option D. The buyers hope to renegotiate after closing. The correct answer is option B. Closing of the transaction, written agreement of the parties, statutory affidavit, or court order. Trust funds may be disbursed only under recognized authority such as closing, written agreement, applicable statutory affidavit, or court order. A verbal request or social media post does not provide the necessary authority. A buyer's later wish to renegotiate is not a trust fund disbursement event. Question 43. A landlord receives a forwarding address after a tenant leaves a Minnesota rental. What deadline is commonly tested for returning the deposit or giving a written explanation for Quinn in Red Wing involving a mixed-use property priced at $286,000? Option A. Within 1 year after the lease began. Option B. Only at the next property tax settlement. Option C. Within 21 days after the tenancy ends, assuming the forwarding address requirement is met. Option D. Whenever the landlord sells the building. The correct answer is option C. Within 21 days after the tenancy ends, assuming the forwarding address requirement is met. Minnesota landlord-tenant materials commonly test the 21-day security deposit return or explanation period after the tenancy ends and the forwarding address is provided. Waiting for a tax settlement, building sale, or 1-year mark does not match the standard rule. The landlord must account for the deposit promptly. Question 44. Why is the Minnesota agency disclosure form given to Rowan Anderson not enough by itself to create representation? Option A. It automatically creates dual agency for every transaction. Option B. It replaces all purchase agreement requirements. Option C. It gives the consumer a license to sell property. Option D. It is a disclosure only, and representation requires a written listing contract or buyer representation contract. The correct answer is option D. It is a disclosure only, and representation requires a written listing contract or buyer representation contract. The agency disclosure form informs consumers about relationship options but does not create representation. Representation requires a written contract such as a listing agreement or buyer representation contract. The other choices confuse disclosure with dual agency, purchase contracts, or licensing authority. Question 45. A buyer brings certified funds for price, closing costs, and prepaid items after lender credits are applied. What is this amount commonly called for Reese in Eden Prairie involving a vacant lot priced at $378,000? Option A. Cash to close. Option B. Gross rent multiplier. Option C. Functional obsolescence. Option D. Protective list. The correct answer is option A. Cash to close. Cash to close is the amount the buyer must bring to complete the transaction after credits, loan proceeds, and closing charges are calculated. GRM is an appraisal shortcut, functional obsolescence is depreciation, and a protective list relates to override clauses. The question is about closing settlement funds. Question 46. During a Duluth license renewal review, which continuing education schedule best matches Minnesota salesperson requirements for Rowan and Duluth involving a farm parcel priced at $356,500? Option A, 10 hours every 4 years with no annual deadline. Option B, 30 hours before the June 30th renewal deadline, with at least 15 hours completed before the previous June 30th. Option C, 30 hours only during the first licensing year. Option D, only the required module with no other continuing education. The correct answer is option B, 30 hours before the June 30th renewal deadline, with at least 15 hours completed before the previous June 30th. Minnesota salespersons generally need 30 hours of continuing education before the June 30th renewal deadline, with at least 15 hours due before the previous June 30th. The other options understate the hours, remove the annual structure, or treat the module as the only requirement. Continuing education must be completed in the proper license period. Question 47. A rental property produces $35,500 in net operating income and investors require a 6.5% capitalization rate. What value is indicated by the income approach? Option A, $221,875. Option B, $181,875. Option C, $546,154. Option D, $33,350. The correct answer is option C, $546,154. The income approach using direct capitalization divides net operating income by the capitalization rate. Gross rent multiplier, loan amount, and frontage calculations use different inputs. The cap rate converts expected net income into an indicated value. Question 48. If an override clause appears in Jordan Patel's listing agreement, what must the licensee provide within 72 hours after the listing expires for the clause to be effective? Option A, a new deed. Option B, a county tax appeal. Option C, a mortgage payoff statement. Option D, a protective list. The correct answer is option D, a protective list. An override clause is tied to a protective list supplied within the required time after expiration. A deed, tax appeal, or payoff statement does not preserve the broker's override rights. The protective list identifies prospects covered by the clause. Question 49. An advertisement says a rental house is available only for adults with no children. What is the main fair housing concern for Parker in Northfield involving a rental house priced at $355,000? Option A. The statement indicates a preference or limitation based on familial status. Option B. The ad forgot to mention the roof age. Option C. The ad uses a list price instead of an appraised value. Option D. The ad includes the city name. The correct answer is option A. The statement indicates a preference or limitation based on familial status. Advertising cannot indicate a discriminatory preference or limitation based on familial status except where a valid housing for older persons exemption applies. Roof age, list price, and city name are not the fair housing issue in the wording. The problem is discouraging families with children. Question 50. A loan payment schedule gradually reduces principal until the loan balance reaches zero. What financing term describes this for Avery and Brainerd involving a townhome priced at $368,500? Option A, accretion. Option B, amortization. Option C, subordination. Option D, this cheat. The correct answer is option B, amortization. Amortization is repayment of a debt through payments that reduce principal over time. Accretion is natural land buildup, subordination changes lien priority, and escheat transfers property to the state when no heirs exist. The decreasing loan balance is the clue. Question 51. While interviewing with two firms in Mankato, Finley asks how many Minnesota brokers may supervise the salesperson during the same period. Option A, 2 brokers if both brokers consent. Option B, any number of brokers if the salesperson discloses the arrangement. Option C, 1 actively licensed broker. Option D, one broker for residential sales and a separate broker for leases. The correct answer is option C, one actively licensed broker. A salesperson in Minnesota is licensed to act on behalf of one broker during the same period. Consent or disclosure does not create authority to work under multiple brokers. Splitting residential and leasing work between brokers would still violate the Single Broker Association rule. Question 52. A buyer purchases a $323,000 property with a 90% loan. What is the approximate loan amount? Option A, $32,300. Option B, $16,150. Option C, $2,400. Option D, $290,700. The correct answer is option D, $290,700. Loan amount is found by multiplying the sale price by the loan-to-value percentage. Down payment is the remaining equity, commission is based on brokerage compensation, and annual tax is a government charge. The loan-to-value percentage controls the financing amount. Question 53. Two investors own a Bloomington duplex with unequal shares and no survivorship language. Which ownership form is most likely for Drew in Bloomington involving a vacant lot priced at $414,000? Option A, tenancy in common. Option B, tenancy by the entirety. Option C, severalty. Option D, life tenancy only. The correct answer is option A, tenancy in common. Tenancy in common allows unequal ownership shares and has no automatic right of survivorship. Severalty means one owner, and a life tenancy is measured by a life. Tenancy by the entirety is a special marital form not described by unequal investor shares. Question 54. Why would an appraiser rely heavily on the cost approach for a newly built lake cabin in Red Wing? Option A. It ignores land value completely. Option B. Replacement cost and depreciation can be estimated more reliably for new improvements. Option C. It is the only legal method for all residential property. Option D. It values the property only by monthly rent. The correct answer is option B. Replacement cost and depreciation can be estimated more reliably for new improvements. The cost approach is useful for new construction because replacement cost and accrued depreciation can be estimated with less uncertainty. It still includes land value and is not the only legal method for every property. Monthly rent belongs to income analysis rather than cost analysis. Question 55. A deed expressly creates survivorship between co-owners of a rental house. Which ownership feature is being emphasized for Kendall in Moorhead involving a rental house priced at $471,000? Option A. No right to possess the property. Option B. A tenant's trade fixture right. Option C. Right of survivorship in joint tenancy. Option D. A mortgagee's foreclosure priority. The correct answer is option C. Right of survivorship in joint tenancy. Joint tenancy is associated with right of survivorship when properly created. Co-owners generally have possession rights, and trade fixtures concern tenants rather than co-owner succession. Mortgage priority is a lien issue, not survivorship ownership. Question 56. A property has monthly gross rent of $2,050 and sells for $235,750. What is the gross rent multiplier? Option A, 8%. Option B, 6.2%. Option C, 90%. Option D, 115.0. The correct answer is option D, 115.0. Gross rent multiplier is price divided by gross rent for the same period. Cap rate, commission rate, and loan-to-value percentage measure different relationships. GRM is a quick income property comparison tool, not a complete valuation method. Question 57. Which ownership estate gives Blair Rivera the greatest bundle of rights with no stated end date or condition? Option A, fee simple absolute. Option B, estate at sufferance. Option C, life estate. Option D, license. The correct answer is option A, fee simple absolute. Fee simple absolute is the broadest ownership estate and can continue indefinitely. A life estate ends with a measuring life, an estate at sufferance arises from holdover possession, and a license is permission rather than an estate. The key phrase is ownership without a stated end date or condition. Question 58. A buyer includes an inspection condition in a Brainerd purchase agreement. What is the role of that contingency for Avery and Brainerd involving a small retail building priced at $409,500? Option A. It automatically transfers title to the buyer. Option B. It makes the buyer's duty to perform depend on the stated inspection condition being satisfied or waived. Option C. It eliminates the need for earnest money accounting. Option D. It makes the broker a home inspector. The correct answer is option B. It makes the buyer's duty to perform depend on the stated inspection condition being satisfied or waived. A contingency is a condition that must be satisfied, waived, or otherwise resolved for the contract obligations to proceed as written. It does not transfer title or remove trust accounting duties. The broker does not become the inspector merely because the contract contains an inspection contingency. Question 59. At Pine Ridge Realty, a salesperson asks which online system the Commerce Department uses for many licensing services such as applications, renewals, and transfers for Reese and Eden Prairie involving a condominium unit priced at $298,000. Option A, MLS Grid. Option B, Torrens Online. Option C, Pulse. Option D, HUD Exchange. The correct answer is option C, Pulse. Pulse is the electronic licensing system used for many Minnesota Commerce Department licensing services. MLS systems, Torrens records, and HUD resources serve different purposes. Knowing the licensing portal helps distinguish administrative filing from transaction records and federal housing resources. Question 60. A retail tenant pays base rent plus a percentage of monthly sales. What lease type is described for Taylor in Winona involving a newly built townhouse priced at $374,000? Option A, ground lease only. Option B, graduated deed. Option C, quitclaim lease. Option D, percentage lease. The correct answer is option D, percentage lease. A percentage lease includes rent based partly on the tenant's sales, commonly in retail settings. A ground lease involves leasing land, and the other terms are not standard lease classifications. The sales volume rent formula is the key clue. Question 61. A mortgage contains a clause allowing the lender to call the full balance due after default. What clause is this for Cameron in Rochester involving a newly built townhouse priced at $210,000? Option A, acceleration clause. Option B, habendum clause. Option C, quiet enjoyment clause. Option D, substitution clause in appraisal. The correct answer is option A, acceleration clause. An acceleration clause allows the lender to demand the entire debt after default. A habendum clause is associated with deeds, quiet enjoyment appears in leases, and substitution in appraisal is a valuation principle. The trigger is borrower default. Question 62. A licensee in Blaine wants to know which required continuing education topics must be included in the renewal cycle along with the general module for Sawyer in Blaine involving a townhome priced at $256,000. Option A, only appraisal theory and mortgage underwriting. Option B, agency law and fair housing. Option C, only property insurance and income tax preparation. Option D, only construction codes and zoning administration. The correct answer is option B, agency law and fair housing. Minnesota renewal requirements include agency representation and disclosure training and fair housing training as part of the required education mix. Appraisal, insurance, tax, construction, and zoning topics may be useful, but they do not replace those mandated topics. The rule is designed to keep licensees current on representation and anti-discrimination duties. Question 63. A broker closes an existing trust account without notice. Why is that a problem under Minnesota trust account rules for Finley in Woodbury involving a mixed-use property priced at $302,500? Option A, trust accounts may never be changed under any circumstances. Option B, only buyers can close brokerage trust accounts. Option C, A broker or closing agent must give written notice to the commissioner before closing an existing trust account. Option D. Trust accounts are optional for earnest money. The correct answer is option C. A broker or closing agent must give written notice to the commissioner before closing an existing trust account. Minnesota rules require notice of trust account status changes and written notice before closing an existing account. This does not mean accounts can never change, but they must be properly reported. Buyers do not control brokerage trust accounts, and trust accounts are not optional when trust funds must be held. Question 64. Under Minnesota licensing rules, what happens when a salesperson's association with an actively licensed broker ends for Rowan in Duluth involving a vacant lot priced at $306,000? Option A. The salesperson may continue independently for 90 days. Option B. The salesperson automatically becomes a limited broker. Option C. The salesperson may transfer clients without broker supervision. Option D. The salesperson's license becomes inactive until proper association is restored. The correct answer is option D. The salesperson's license becomes inactive until proper association is restored. A salesperson license depends on active association with a licensed broker. Ending that association makes the license inactive, so independent practice is not allowed. Automatic broker status and unsupervised client transfers are not part of the salesperson licensing structure. Question 65. If Reese passes the salesperson examination on a spring test date, how long does the candidate generally have to apply for the license before retaking the exam is required for Reese in Eden Prairie involving a condominium unit priced at $339,500? Option A. 1 year from passing the examination. Option B. 30 days from passing the examination. Option C. 3 years from passing the examination. Option D. Until the next broker renewal cycle only. The correct answer is option A. 1 year from passing the examination. Minnesota guidance states that the salesperson license application must be made within 1 year after passing the examination. Shorter periods such as 30 days are too restrictive, and longer periods ignore the retake requirement. The broker renewal cycle does not control the candidate's examination validity period. Question 66. A borrower gives a mortgage on a Egan property while retaining possession. What financing concept lets the borrower pledge the property without surrendering it for Harper & Egan involving a townhome priced at $218,000? Option A. Avulsion. Option B. Hypothecation. Option C. Emblements. Option D. Accession. The correct answer is option B. Hypothecation. Hypothecation means pledging property as security for a debt while retaining possession. Avulsion and accession concern land or property changes, while emblements are crops. Mortgage lending commonly uses hypothecation. Question 67. If annual property taxes of $3,150 are prorated to the seller for 276 days on a 365-day basis, approximately what amount is charged to the seller? Option A. $13,590. Option B. $3,171. Option C. $2,382. Option D. $793. The correct answer is option C. $2,382. Tax proration divides the annual tax by 365 and multiplies by the number of seller days. Commission, discount points, and monthly interest are unrelated calculations. Proration allocates an annual expense fairly between buyer and seller at closing. Question 68. A broker compares a buyer's desired use with zoning rules, parcel size, and market demand. What appraisal principle is being considered for Blair in Mankato involving a mixed-use property priced at $210,000? Option A. Tie-in arrangement. Option B. Novation. Option C. Steering. Option D. Highest and best use. The correct answer is option D. Highest and best use. Highest and best use evaluates legal permissibility, physical possibility, financial feasibility, and maximum productivity. Tie-in arrangements, novation, and steering involve antitrust, contract substitution, and fair housing concerns. The analysis is about the most supportable property use. Question 69. Under federal fair housing law, which group is a protected class in the sale or rental of housing for Taylor and Winona involving a newly built townhouse priced at $246,000? Option A, familial status. Option B, credit score above 700. Option C, preference for lakefront homes. Option D, employment in real estate sales. The correct answer is option A, familial status. Familial status is a protected class under federal fair housing law. Credit score, housing preferences, and occupation in real estate are not protected classes by themselves. Housing decisions must avoid discrimination based on protected characteristics. Question 70. If a seller rejects Skylar Chen's offer and the listing broker holds the earnest money, when should the rejected offer's earnest money be returned? Option A, only after the seller signs a different purchase agreement. Option B, no later than the next business day after rejection. Option C, at the end of the listing period. Option D, after the broker deducts marketing expenses. The correct answer is option B, no later than the next business day after rejection. When an offer is rejected, Minnesota trust account rules require earnest money to be returned to the potential buyer no later than the next business day after rejection. The broker cannot hold it until another sale, listing expiration, or reimbursement of marketing costs. Rejected offers do not create a right to keep the buyer's funds. Question 71. If assessed value is $411,825 and the tax rate is 25 mils, what is the annual property tax? Option A, $1,897. Option B, $8,128. Option C, $10,296. Option D, $108,375. The correct answer is option C, $10,296. A mil is $1 per $1,000 of assessed value, so the tax is assessed value multiplied by mils divided by 1,000. Monthly interest, points, and down payment are financing calculations. Millage questions require converting mils to a decimal rate. Question 72. Which appraisal approach is usually most persuasive for a typical owner-occupied home in a subdivision with many recent comparable sales for Skylar in St. Cloud involving a rental house priced at $454,500? Option A, cost approach only. Option B, income approach only. Option C, front foot method only. Option D, sales comparison approach. The correct answer is option D, sales comparison approach. The sales comparison approach is usually strongest when similar properties have sold recently in the same market. The cost approach can be useful for new or special purpose improvements, and the income approach is more relevant to income-producing property. Front foot analysis is a land valuation tool, not the main method for a typical home. Question 73. If a Minneapolis property sells for $290,500 and the buyer obtains a 90% loan, what is the buyer's down payment? Option A, $29,050. Option B, $261,450. Option C, $14,525. Option D, $768. The correct answer is option A, $29,050. The down payment is the sale price minus the loan amount. The loan amount is the financed portion, the commission is a brokerage compensation calculation, and the tax proration allocates property taxes. Separating buyer equity from loan proceeds is a core exam math skill. Question 74. After passing the examination, Drew wants to submit a Minnesota salesperson license application immediately. Which education requirement still must be met before applying for Drew in Bloomington involving a farm parcel priced at $306,500? Option A, only course I is ever required for the license. Option B, courses 2 and 3 must be successfully completed if they have not already been completed. Option C, a broker's 30-hour course must replace course 3. Option D, no additional education is needed once the exam is passed. The correct answer is option B. Courses 2 and 3 must be successfully completed if they have not already been completed. Course I opens exam eligibility, but courses 2 and 3 must be completed before the salesperson license application. Passing the exam does not erase the remaining pre-license education requirement. The other options either omit required courses or invent a broker-only replacement course. Question 75. A lot has 120 front feet worth $160 per front foot. What is the indicated front foot value? Option A, $1,435. Option B, $18,900. Option C, $19,200. Option D, $306,250. The correct answer is option C, $19,200. Front foot valuation multiplies frontage by the price per front foot. Tax proration, commission, and income capitalization rely on other formulas. The question asks only for the land value indicated by frontage. Question 76. A licensee in Mankato drafts a complex legal clause for Rohan Patel instead of recommending legal counsel. What risk is created? Option A, constructive eviction. Option B, of functional obsolescence. Option C, inverse condemnation. Option D, unauthorized practice of law. The correct answer is option D, unauthorized practice of law. Licensees may fill in approved forms and explain business terms, but drafting legal clauses can cross into unauthorized practice of law. Constructive eviction, functional obsolescence, and inverse condemnation describe different legal or valuation issues. Complex legal drafting should be handled by an attorney. Question 77. A listing contract says it may be cancelled only under certain stated conditions. Why does that matter for Avery and Brainerd involving a townhome priced at $465,000? Option A, Minnesota listing agreements must explain whether cancellation is allowed and the terms for cancellation. Option B, cancellation terms are never allowed in listing agreements. Option C, only the buyer may cancel a seller's listing. Option D, the broker can cancel only by recording a deed. The correct answer is option A. Minnesota listing agreements must explain whether cancellation is allowed and the terms for cancellation. Minnesota listing agreements must include a clear statement explaining if the agreement may be cancelled and the cancellation terms. The issue is contract clarity, not deed recording or buyer control. Stated cancellation terms help prevent disputes. Question 78. At the end of a Minnesota tenancy, what must a landlord generally do with the tenant's security deposit after receiving a forwarding address for Hayden and Street Paul involving a duplex priced at $298,500? Option A, keep the entire deposit automatically as a cleaning fee. Option B, return the deposit plus interest or provide a written explanation of lawful deductions within the required time. Option C, apply the deposit to the broker's commission. Option D, record the deposit with the county as a deed restriction. The correct answer is option B. Return the deposit plus interest or provide a written explanation of lawful deductions within the required time. Minnesota law requires the landlord to return the deposit with interest or provide a written explanation for lawful deductions within the required period. Automatic forfeiture, commission payment, and county deed restrictions do not match the security deposit rules. Security deposits remain tenant funds unless a lawful deduction applies. Question 79. Why might Harper Thompson use a quitclaim deed to clear a possible title issue? Option A. It guarantees the property is free of every lien. Option B. It creates a new mortgage automatically. Option C. It transfers whatever interest the grantor may have without making title warranties. Option D. It replaces the need for delivery and acceptance. The correct answer is option C. It transfers whatever interest the grantor may have without making title warranties. A quitclaim deed can release or transfer any interest the grantor may have, but it does not warrant title quality. It does not guarantee lien-free ownership or create a mortgage. Like other deeds, it still depends on proper execution, delivery, and acceptance. Question 80. An appraiser adjusts comparable sales for differences from the subject property. Which approach is being applied for Finley in Woodbury involving a single-family home priced at $315,500? Option A, cost approach only. Option B, income approach only. Option C, mortgage registry method. Option D, sales comparison approach. The correct answer is option D, sales comparison approach. The sales comparison approach compares the subject to similar sold properties and adjusts for differences. Cost and income approaches use different inputs, and mortgage registry tax is not an appraisal method. Comparable sale adjustment is a core valuation technique. Question 81. If Taylor Lee pays interest only for the first month on a $281,200 loan at 6.5%, approximately what is 1 month's interest? Option A, $1,523. Option B, $8,436. Option C, $1,563. Option D, $10,450. The correct answer is option A, $1,523. Monthly interest is calculated by multiplying the loan balance by the annual rate and dividing by 12. Points, tax proration, and front foot value use different formulas and bases. Interest calculations test careful conversion from annual to monthly rates. Question 82. When Cameron Chin buys a condominium unit in St. Cloud, what does the buyer typically own? Option A, only a stock certificate and no real property interest. Option B, the individual unit plus an undivided interest in the common elements. Option C, the entire building in severalty. Option D, a temporary license to occupy the unit. The correct answer is option B, the individual unit plus an undivided interest in the common elements. Condominium ownership generally includes the individual unit and an undivided interest in common elements. A cooperative usually involves shares and a proprietary lease, not condominium ownership. The buyer does not own the whole building alone or merely hold a temporary license. Question 83. In Maple Grove, a new applicant asks which combination best describes the salesperson licensing path in Minnesota for Morgan in Maple Grove involving a fourplex priced at $196,000. Option A, be at least 21, complete only Course I, and work independently after passing the exam. Option B, complete continuing education before any pre-license education and apply directly without a broker. Option C, be at least 18, complete courses 1, 2, and 3, pass the exam, associate with a broker, and receive Commerce Department approval. Option D, pass only the national exam and begin practicing while the application is pending. The correct answer is option C. Be at least 18, complete courses 1, 2, and 3, pass the exam, associate with a broker, and receive Commerce Department approval. Minnesota salesperson licensing requires age eligibility, 3 30-hour pre-license courses, examination success, broker association, and approval by the Commerce Department. The other choices either remove required courses, allow independent practice, or treat a pending application as authority to act. Those alternatives do not satisfy the licensing sequence. Question 84. In a dual agency situation in Woodbury, why must the licensee avoid advocating exclusively for one party for Finley in Woodbury involving a mixed-use property priced at $257,500? Option A, the broker becomes a government mediator. Option B, the buyer automatically becomes the broker's only client. Option C, the seller's broker relationship disappears at acceptance. Option D, the broker owes duties to both buyer and seller within the limits of dual agency. The correct answer is option D. The broker owes duties to both buyer and seller within the limits of dual agency. Dual agency means the broker owes duties to both sides and must work within those limits. The broker is not converted into a government mediator, and neither party becomes the only client. Acceptance of an offer does not eliminate the agency relationship or the disclosure limits. Question 85. Under the Minnesota Human Rights Act, which protected basis expands beyond the traditional federal fair housing list for Finley in Woodbury involving a lake cabin priced at $426,000? Option A, status with regard to public assistance. Option B, preference for a short commute. Option C, owning 2 vehicles. Option D, having a fixed-rate mortgage. The correct answer is option A, status with regard to public assistance. Minnesota housing and real property discrimination law includes status with regard to public assistance among protected bases. Commute preference, vehicle ownership, and mortgage type are not protected classes. State law can add protections beyond the federal baseline. Question 86. A Duluth parcel contains 9 acres. How many square feet are in the parcel for Rowan in Duluth involving a condominium unit priced at $242,000? Option A, $24,000. Option B, $392,040. Option C, $193,600. Option D, $4,356. The correct answer is option B, $392,040. 1 acre contains 43,560 square feet, so acreage is converted by multiplying acres by 43,560. Frontage value, loan amount, and tax amount are calculated from different data. Unit conversion is a common real estate math task. Question 87. A pooled interest-bearing trust account earns interest on client funds, unless otherwise agreed, where is the interest generally paid under Minnesota rules for Morgan in Maple Grove involving a rental house priced at $400,500? Option A, to the salesperson as a bonus. Option B, to the listing client automatically. Option C, to the Minnesota Housing Finance Agency for the Housing Trust Fund account. Option D, to the county assessor's operating budget. The correct answer is option C, to the Minnesota Housing Finance Agency for the Housing Trust Fund account. Minnesota rules direct interest from pooled trust accounts, less reasonable costs, to the Minnesota Housing Finance Agency for the Housing Trust Fund account unless the parties specify otherwise. The salesperson, listing client, and county assessor are not the default recipients. Trust account interest is regulated separately from commission. Question 88. A buyer pays 1% in discount points on a $160,650 loan. Approximately how much are the points? Option A, $904. Option B, $28,350. Option C, $13,230. Option D, $1,606. The correct answer is option D, $1,606. 1 discount point equals 1% of the loan amount, so the points are calculated by multiplying the loan amount by the point percentage. Monthly interest, down payment, and commission are calculated from different formulas. The point charge is a loan cost calculation, not a sales commission or equity contribution. Question 89. A broker learns that a foundation defect could significantly affect Hayden Lee's use of a townhome in Rochester. What should the broker do? Option A, disclose the material fact to the prospective purchaser. Option B, stay silent because the defect might reduce the seller's price. Option C, disclose only after closing if the buyer complains. Option D, treat the defect as confidential even if it affects use and enjoyment. The correct answer is option A, disclose the material fact to the prospective purchaser. Known material facts that could adversely and significantly affect an ordinary buyer's use or enjoyment must be disclosed. Protecting a sale price does not excuse non-disclosure, and waiting until after closing defeats the purpose of the rule. Confidentiality does not cover facts that law requires to be disclosed. Question 90. Recording a deed for a rental house in Olmsted County primarily gives what type of notice to the public? Option A, private notice only to the buyer's lender. Option B, constructive notice. Option C, a zoning variance. Option D, a guarantee of physical condition. The correct answer is option B, constructive notice. Recording places an instrument in the public records and gives constructive notice of the recorded interest. It does not create a zoning variance or guarantee the property's physical condition. The public records system protects priority and notice, not building quality. Question 91. A Northfield buyer's loan has small monthly payments but one large final payment. What is that final payment called for Parker in Northfield involving a rental house priced at $415,000? Option A, pre-aeration credit. Option B, replacement reserve. Option C, balloon payment. Option D, equity dividend. The correct answer is option C, balloon payment. A balloon payment is a large unpaid balance due at the end of a loan term. A pre-aeration credit divides expenses at closing, a replacement reserve funds future repairs, and an equity dividend is an investment return measure. The structure described is a financing feature. Question 92. In appraisal, what does highest and best use require for Harper & Egan involving a small retail building priced at $383,500? Option A. The use that produces the highest commission. Option B. The use preferred by the current tenant only. Option C. The use with the lowest property tax bill. Option D. A use that is legally permissible, physically possible, financially feasible, and maximally productive. The correct answer is option D. A use that is legally permissible, physically possible, financially feasible, and maximally productive. Highest and best use considers legal, physical, financial, and productivity tests. Commission, tenant preference, and tax savings alone do not determine highest and best use. The concept focuses on the most supportable use of the property as real estate. Question 93. Regarding commission language in a Minnesota listing agreement, which statement best reflects the required consumer notice for Drew in Bloomington involving a condominium unit priced at $424,500? Option A. Compensation is determined between each individual broker and the broker's client. Option B. The state sets one mandatory commission rate for all residential listings. Option C. The MLS sets the minimum commission for every listing. Option D. The buyer must always pay the listing broker directly. The correct answer is option A. Compensation is determined between each individual broker and the broker's client. Minnesota listing agreements must include a notice that compensation is determined between the broker and the broker's client. The state and MLS do not set a universal commission rate for every transaction. Payment arrangements depend on the agreement and cannot be assumed from the listing alone. Question 94. Before advertising Morgan Nolan's small retail building to the general public, what must a Minnesota licensee obtain? Option A. An oral promise that the owner may list later. Option B. A signed listing agreement or other signed written authorization from the owner or authorized person. Option C. A buyer's pre-approval letter. Option D. A tax parcel map from the county. The correct answer is option B. A signed listing agreement or other signed written authorization from the owner or authorized person. A licensee must have a signed listing agreement or other signed written authorization before advertising real property for sale or lease to the general public. Oral permission is not enough for this requirement. Buyer pre-approval and tax maps may be useful, but they do not authorize public advertising. Question 95. A seller accepts an offer only after the buyer receives financing approval. What type of clause is most likely involved for Reese in Eden Prairie involving a condominium unit priced at $366,500? Option A. Habendum clause. Option B. Subordination clause. Option C. Financing contingency. Option D. Acceleration clause only. The correct answer is option C. Financing contingency. A financing contingency makes performance depend on loan approval or financing terms. A habendum clause appears in deeds, subordination changes lien priority, and acceleration makes a debt due after default. The condition involves financing approval. Question 96. A lender must disclose the cost of consumer credit so borrowers can compare loan terms. Which federal law is most directly involved for Quinn and Red Wing involving a mixed-use property priced at $380,000? Option A. Sherman Antitrust Act only. Option B. Clean Water Act only. Option C. Minnesota Torrens Act only. Option D. Truth in Lending Act. The correct answer is option D. Truth in Lending Act. Truth in lending requires disclosure of credit terms such as APR in many consumer loans. antitrust, environmental, and Torrens land registration laws address different areas. The question focuses on loan cost disclosure. Question 97. A utility company has the right to run power lines across a Stillwater parcel. Which property right is usually involved for Riley and Stillwater involving a vacant lot priced at $231,000? Option A, easement and gross. Option B, the state for years. Option C, divulsion. Option D, a remainder interest. The correct answer is option A, easement and gross. A utility easement often benefits a company rather than a neighboring parcel, making it an easement in gross. An estate for years is a leasehold, a avulsion is sudden land change, and a remainder follows a life estate. The utilities right is a non-possessory use right. Question 98. For a pre-1978 residential property, what federal disclosure issue should a licensee remember for Casey and Edina involving a lake cabin priced at $462,500? Option A. The property can never be sold. Option B. Lead-based paint disclosure requirements may apply before the buyer or tenant is obligated. Option C. Only commercial buyers receive the pamphlet. Option D. Lead disclosure replaces all agency disclosure. The correct answer is option B. Lead-based paint disclosure requirements may apply before the buyer or tenant is obligated. Federal lead-based paint rules apply to many pre-1978 residential transactions and require disclosure before the buyer or tenant is obligated. The rules do not ban every sale or limit disclosure to commercial buyers. Lead disclosure is separate from agency disclosure and material fact duties. Question 99. A tenant with a disability asks for an assigned accessible parking space near the entrance. What fair housing concept is most directly involved for Drew in Bloomington involving a farm parcel priced at $291,000? Option A, adverse possession. Option B, yield spread premium. Option C, reasonable accommodation. Option D, defeasance clause. The correct answer is option C, reasonable accommodation. A reasonable accommodation is a change in rules, policies, or services that may be needed for a person with a disability to use and enjoy housing. Adverse possession concerns ownership claims, yield spread premiums concern loan compensation, and defeasance clauses concern loan satisfaction. The requested parking change involves access to housing. Question 100. At closing, why are prepaid property taxes or rents commonly prorated between buyer and seller for Sawyer and Blaine involving a small retail building priced at $317,000? Option A. To change the sales price after acceptance. Option B. To avoid recording the deed. Option C. To eliminate the need for title insurance. Option D. To allocate income or expenses to the party who owned the property during the relevant time period. The correct answer is option D. To allocate income or expenses to the party who owned the property during the relevant time period. Priorations allocate recurring income and expenses based on the period each party is entitled to or responsible for them. They do not rewrite the price, avoid recording, or replace title insurance. Closing statements use debits and credits to make this allocation.